Good morning, everyone, and welcome to the PivotBoss Pre-Market Report. I'm Frank Ochoa, aka PivotBoss, on this day, May 3rd, 2017. We have a holding pattern here as we head into the FOMC statement and Fed funds interest rate decision later on this afternoon, 1 p.m. Central, 2 p.m. Eastern. That's going to be the big one that everybody's waiting for. We also have ADP coming out. We have EIA report for crude oil, and later on this week, NFP report. And we also have the Janet Yellen speaking in addition to French election this weekend. So we have a whole lot of data points coming out, and that means the market's going to be rather quiet and heading into the big reports coming out later on today. However, we should begin to see some sort of volatility out of this range at some point. But heading into these reports, heading into these data points, you have to be very, very careful. The market's likely going to fade back and forth. Yesterday, 88.75 was the high yet again. 3 of the last 4 days. That's just incredible. We have 76.5 to 77 down below as a key level as well. So fading edges of the range still the best idea until we see that FOMC statement come out later on this afternoon. That's going to give us a 1 p.m. open data point, very similar to what you see right here, the FOMC from 3:15. That gives us a very significant data point to watch and trade off of over the next day, over the next week, and even over the next few months. So that's going to be very important. But up until now, we really don't have much to do. We have a tight range going on. We are at the top of this key range. And again, as I mentioned, if these late bulls don't get paid, you begin to see a rotation back down toward 53, a fill of the gap at 48s, and then perhaps a rotation across the range. But again, this market, every time it pulls back, has been a buying opportunity. We really need to see acceptance beyond 2400. 2401 to begin pushing higher toward those next targets. We have those next targets at 2424 and 2459.75, but right now, just kind of a wait and see pattern. On an intraday basis, again, you got to be very, very careful. Not a whole lot to do at the moment except for watching edges. That's kind of the path right now. And you can see here's the previous session's low, and I mentioned yesterday the best area to look to defend would be 2380 to 2381. Right now, price got as low as 81.75 yesterday before finding a low. Found a high at 88.75. Very small range overall. Right now, we're seeing a rejection of the previous session's low right into 81 evens, and we're seeing a little bit of a move up. So this could lead to a little bit of a rotation back up the range, and then up here it could be an opportunity to fade it back down. But again, be very, very cautious as we head into that FOMC statement. All right, here's a look at crude oil. Let's take a look at the higher time frame. Here's a look at higher time frame crude. One thing we mentioned yesterday was that while bulls had defended 48.80s, the idea was that you would likely see this stop start to come out. We had failed new highs, we have a downtrending market, and while we did see bulls come in and attempt to defend, we also saw that bears were really coming in off of the previous week's close and defending that level, which implied we'd likely see new lows. And we saw new lows yesterday. The bottom fell out, new lows below the previous low, and we dropped all the way into 47.35s. Not quite into 47.10s just yet, but that's still below. So we could see even more weakness here ahead. We're already trading below the previous session's midpoint, below the previous month's low. And we could see bulls start to come in yet again in this area. It was very, very thick with support in this zone before, and that led to the recent rally back toward 53s. But again, watch this area down here. We'll see how price plays out. This is about the area where we could begin to see price turn again for a shot back up toward 51.71, perhaps back up the ladder toward 53.40. So this is the zone into 47.10. We're not quite in there yet, but we're getting close. Again, crude oil remains in a downtrending market, so you have to be cognizant of the current downtrend and look to defend selling rotation so far until you see that major rejection that could spark the return. And at the moment, you can see up here, still in a downtrending market, prices above the previous session close offered heavily. That's how you know you're in a downtrending market right now. Bears selling the previous close and prices above it heavily. So we have short-term support sitting at 47.80. That's the current range right now, 48.25, 47.80. you could see this thing bounce back and forth a little bit with a downward bias as prices look to test that 47.35 and below into that 47.10. All right, if we take a look at actually, you know what? Let's go with gold. Let's go with gold here. If we take a look at gold, bring this up to the higher time frame. And this was another one very similar to crude oil, where we saw bulls coming in to defend 1263s, but over time we didn't get that lift, so we switched to looking to run the stops through 63s for a shot at running the target into 1250 and 1240. We've seen that occur. We saw the stops come out and price push downward, got very close to our 1250 target, and now we had another shift up here. We've had another composite VPOC shift from 1232s up to 1250s, and now it's even shifted higher again, 1259. So right now, another VPOC shift up. What I did notice before is that, we have a very clear uptrending channel, and 1240 may be the zone here where we begin to find some sort of support and perhaps begin to trap late sellers, very similar to this, and that could lead to another move up toward 1300, very similar to this. So we may have a little bit more downside here, and then we could begin looking to hunt for longs somewhere in this zone here, 1240. Up until then, we're going to likely see some short-term selling pressure, and again, that FOMC statement and the Fed fund interest rate decision is going to be very, very important. All right, let's take a look at the intraday time frame for a moment. Dropping this down to the intraday here, you'll see that price right now, again, in a downtrending market being offered at the previous close, in a downtrending market right now with VWAP sloping downward. So any rotation right now into 59 and 60 is a big time area to defend for sellers. So if we get any push into the zone, look for bears to defend and look to push to new lows. Above 60 opens up a retest at 63, and that's a big time pivot up there that bears still want to keep offered, and that's the major pivot right now to watch in the charts. Let's take a look at ZB. There we go. Now ZB in the higher time frame, again, very similar to some of these other markets in a holding pattern at the moment. So we have a clear range that is formed here. 151.11 has been a very important pivot. That's been very, very important. We have 154.07, and that up there opens the door to much more strength. The market tried and failed, and now we're holding much lower here. So this has been the range to fade, 153.10s or thereabouts. You have about 151.20s down here, and you're seeing that fade back and forth. This is building energy for the next key move, and at the moment, the way that the market dropped and faded off of that 154s and prices above it implies that we could be looking at more downside here into composite VPOC at 149.24. So I would say watch the breakout from this range. If we break up first and we fail to get beyond these 153.21s, 154.07, that could be an opportunity for bears to pounce, defend, and return back to 149.24s. So that's going to be what I'll be looking for here out of ZB. How do we respond out of this tightly coiled range? If prices cannot get above this zone, that could be an opportunity to bring this thing back down. All right, that's it for now. Let's see how this thing plays out as we head into the rest of the session. Good luck and trade well.